Welcome back to Metals, Money, and Markets. We're at July 20th. As always, Mickey Fulp, the Mercenary Geologist, will break the info down, and I'm Rob Goodman from MiningClips. All right, Mickey, El Presidente got a little aggressive on his Twitter handle. We've got tariffs. We've got talk about the Fed rates. Let's run through it here where gold had a bad week, but kind of rallied back at the end there.
Yeah, Trump also talked about he wanted a weaker U.S. dollar. So gold had a really bad Thursday. All the precious metals did reach their yearly lows, but they rallied on Friday with Trump's tweets. So that said, gold closed at 1231. Silver had a really bad week at 1551, down 1.7%. Platinum, which went below $800 briefly, rallied once again, closed at 825 for a $2 loss. Palladium, which has been overbought in my opinion, lost 4.5% to close at 889. It's finally coming back to reality.
And meanwhile, copper treks lower.
Copper is now a 1 week shy of its 52-week low. So if it remains at 277, down a nickel on the week, it will reach its 52-week low this week. This is not only restricted to copper, it is affecting the entire base metal complex. That is trade talk, tariff talk. Copper remains in 6-month backwardation. That is not positive going forward. But on the other hand, BDI, the Baltic Dry Index, which is one of the leading economic indicators, it remains high and remains near its 52-week high.
Oil market here holds on to 70, but pretty flat week.
Well, it was actually a very volatile week. It rallied on Friday considerably, but mostly sentiment went negative this week, and a lot of that had to do with supply. Nigeria, Libya, Canada all came back on after some supply disruptions. Trump is stirring the pot a bit about strategic petroleum reserve releases to knock down the price of oil. U.S. inventories were probably the biggest problem over the week, with anticipated decline, which turned into 6 months surplus increase. U.S. production hit a record 11 million barrels after being flat for 5 weeks. Rigs were down 8. And like I said, oil did rally considerably on Friday as some of this negative sentiment made it look overbought.
And meanwhile, uranium puts a 4-week winning streak together.
Yes, it has, and talk amongst ourselves indicates that a more bullish look on uranium with some catalysts, including some movement from the U.S. government. So from that point of view, it is looking stronger. Closed at 23.88, up almost 3% on the week.
And maybe one of these currency markets, as you mentioned at the top, a little heat on the U.S. dollar here, and it backed off a little bit. Relatively flat week.
Yeah, the dollar, well, here's what's going on in the dollar. It keeps bouncing up against resistance at 95, and it doesn't appear to have any ability to stick there. But really, the catalyst this week was Trump coming out with all these tweets between Thursday night and Friday. That took the dollar down once again from above 95. It closed at 94.46, down a quarter on the week. Euro, concomitant and rise closed at a little bit above 117. Loonie was basically flat at 76.07.
And head over to the equities markets here, relatively flat there, but again, 145 tweeted. Things got disrupted.
A little bit on Friday, but all in all, it was a flat week with low volatility. It should be expected during the depth of the summer doldrums. Dow closed at 25.58 for a 37-point gain. S&P 500 basically flat, up a point to 28.02. And NASDAQ closed just a few points off its record high at 78.20, lost 6 points on the week. And meanwhile, the Toronto Venture Exchange hit another 52-week low on very low volume, around 50 million shares a day. The conclusion from the Sprott conference, which you and I both attended this week, is there's some really good resource stocks on sale right now. So this looks like a very good buying opportunity for strong companies. A lot of these companies are 50% off their highs, which occurred in January.
I agree. Okay, Mickey, appreciate the insight as always. Enjoy your weekend, and we will catch you next Friday.
All right. Thanks a lot, Rob.